Hi everyone, today I'm doing my US stock market portfolio review, so I'm going to go through my US stock market portfolio and see how it's all doing in the month of April. Now on the YouTube channel I do this at the end of every quarter, and if you want more regular updates I do it every month on the Patreon, so if you do want to join that, link is in the description. Join through there, you get more monthly updates as well as more exclusive videos on there, a Discord with 600 members on there as well, and you get to know what I'm buying and selling in real time. And I do these portfolio updates just so you can follow along with how I'm doing, the investments that I'm making, what I'm buying, what I'm selling, just a bit of transparency and just so you know the moves that I'm making. And I think that's really good to do it right now, especially when you're seeing so many content creators moving away, the stock market content creators moving away from the stock market scene right now. To be still doing this in a bear market, you're not seeing that too much at the moment. So I wanted to make that very clear as well, you know, that I've done it through many bull markets and I've done it through many bear markets. And you can see how I position myself differently through times when the stock market's going up and the stock market's going down as well. And also it's very important as well, like I said, to take into consideration that we are going through a bear market now, and you'll probably hear me quite a bit in this video mention I can't believe this stock is down at these prices. I'll be saying that quite a bit in this video. And if you're on the Patreon, I did drop a live Q&A session, which is about 30 minutes long, so do go check that out if you are on the Patreon. And a shout out to Netflix. I was a little bit late recording this video because I was just staring at Netflix going, whoa, that's a bit of a drop. It's currently down nearly 24% as of recording this video. The earnings have come out. I really thought, I talked about it on yesterday's video, and I really thought about making a separate video talk about Netflix. I don't know if you guys want to see that, you'll have to let me know, but wow. That is, it's just moved down to 25% down. I think this is actually going to put it like somewhere around a 23 times earnings when it opens up tomorrow. So I don't know if you guys want to see a video on that, but that's a very interesting drop in my opinion. But yeah, just a shout out there to Netflix. But we'll get started onto my portfolio and how everything is doing. So we'll start off with my DeGiro account. So I'll try and spend a minute or two on every position. There's a couple of positions that I do have in a DeGiro and Trading 212 accounts. So if I do get them to round to them again on the other account, I'll probably be pretty quick on that one compared to the other ones. So starting on top, Alibaba. Now Alibaba's a funny one because this is a stock that what I've noticed is a lot of value investors at the moment are shouting out like, oh, this is why, you know, you use DCFs and you can get stocks at really good valuations and everything like that. I've seen a lot of value investors come into Alibaba in the last few months, and that's all that stock has gone is boom down. And so-called value investors that don't overpay for companies are still down on this position like over 30%. And it just shows you, you know, it's not just growth stocks. Value stocks can go down to stupid values that you generally don't think they're going to go down to. There's no magic formula that tells you this is where the stock price is going to go towards the bottom side and where this is going to go up to the upside. It's quite hard to predict all that sort of stuff, and Alibaba's a prime example. You know, who thought Alibaba would go down to these sort of prices, really? There's just so much negativity out there with Chinese stocks at the moment. I think Alibaba's a fantastic company. You know, it's too big to fail in China. Obviously it's going through a bit of a tough period of time at the moment. I think it's a good one that I potentially should buy a few more shares of at the moment, but I think sooner rather than later a lot of this negativity will move away from Chinese stocks. Anything risk on at the moment is massively not in favour. So any risk on stocks, which I tend to like risk on stocks, they generally are quite volatile, and they have you know, in the down days they'll go down a lot more, but on the up days still perform very well. Chinese stocks are very much risk on, and risk on is not wanted, especially Chinese stocks at the moment. But I think Alibaba will come back strong. It is, you know, one of the biggest companies in China, so it will do very well going forward when it goes past this tough period of time that it's going through at the moment. Next up, Carnival. So this is one that I would probably just get break even out of and sell. I'm sure most of you guys are aware of this. This is a stock that I've owned since 2018. The problem with Carnival is that, now when I bought Carnival in 2018, I bought it more as a value play and a dividend play. Unfortunately, I did not know in 2 years' time we were going to have the CV situation, killed it off quite a bit. Now that does generally mean that I am down 90% on my when I was in the CV times, I was down 90% on my position in Carnival, which is a lot. So that's why I'm happy to kind of get break even out of that one, and I think it will do. You know, this year we should see travel come back, and I think I'll probably get out break even on Carnival. I'll just write that down to one that just didn't work out that well. The next stock is Celsius. So this is a very interesting play. It has a lot of revenue growth, a lot of profit growth in the company. It's a product that I tried for market research, and it was actually that good that I've actually come a bit of an addict to it now. I love having Celsius. I would love it to come a little bit cheaper in the UK. That's my only little thing that I'm a little bit don't like about it. But as far as the product goes, absolutely amazing product. The company's fantastic. I think this has so much potential to compete on the lines of with a Red Bull, a Monster. Fantastic product. The only thing I'm really surprised with this one is that the share price is holding up so well. You know, a lot of growth stocks are being sold off in the last few months, and this is probably one that has like one of the higher valuations, and it's actually holding up quite well, which is surprising. So, yeah, I'm a big fan of Celsius. Dropbox, I'm currently up 23% on that one. Maybe I should buy a bit more of Dropbox, but yeah, I'm just prioritising other companies on here at the moment, but I still think it's a fantastic company, so just holding my shares in Dropbox. And then we have Meta, which is currently up 30% at the moment. Obviously, Facebook, this is shares I actually held since 2018, and this was actually up 100%, so this has a major pullback. I'm just happy to hold them shares. I'm adding in to my Facebook position in my other portfolio, my other account, rather than this one at the moment. We have Gang, which is down 64%. Now this is one of the ones that is just at crazy valuations. I cannot believe this stock is at these sort of valuations. I have run the numbers on this, and literally overnight, Gang could 5x, and this stock would still be cheap. That is how stupid these prices are. It's very rare to find a company with a balance sheet of Gangs, the revenue growth of what Gang's going to have, and the potential for the profit growth in such a growth area for the next few years. Really good. So the only concern is that it's starting to make up a lot of my portfolio. That's my only little concern that I do have that one. And it is a bit of a higher risk play with being a small market cap. However, yeah, I'm trying to keep my average. I'm just trying to get my average down on that one, and I am keep buying on that one. So yeah, I think my average is somewhere in the $12 range at the moment. So if I can get that down to single digit, that would be absolutely amazing. Here, currently down 69% on this one. It's just a repeat of Alibaba, unfortunately. Chinese stocks are so not in favour. Literally sitting on more cash than what the company's worth. But until Chinese stocks come in favour, unfortunately, there's not much we can do with that. JD.com, up 175% on that one. Potentially thought about buying a bit more on that one, but I haven't done. Just happy to kind of keep holding that one. And that's another one that, you know, at one point I was up 400% on JD.com, had a major pullback. Microsoft up 155%. Same again, this is a stock that I've held in the account for 5 years now. You know, such a great company. I generally don't know if I would ever sell it, to be honest with you. Probably one that I'll hold for a very long time. Pinterest down 20% on this one. This is, once again, this is insanely cheap. Should really be buying more Pinterest than what I am doing. The profit they're doing now, the revenue growth that it's at, the valuation it's at, is really good. This is a stock that, you know, I think a lot of these stocks have the potential to move so quickly upwards in the right direction at these sort of prices, and that is another one of them. Such a good company, really good valuations right now. But you know, we did well. You know, we got, you know, there's a lot of stocks on here that you also got to remember. You know, at Pinterest there was a time where we were locking in 300% gains on it. So we've done, even though it's down at the moment, we've done very well from a lot of these stocks. You know, in the bull run, I noticed that quite a bit. People always seem to forget like the success that you've had in the bull run. You know, a lot of people will now go, "Oh, you're down 20% on Pinterest," and then they go, "Well, you forget about the time that when we were in a bull run, I was locking in 300% gains on Pinterest." You know, you're forgetting that point. JD.com, you know, you're forgetting the point that when we were locking in 300% gains on that one. Alibaba, you're forgetting when we were locking in 100% gains on that one. Microsoft, you forget when we were locking in 200% gains on that one. It's quite funny to see that side of it at the moment, but that's the negativity that we have around there at the moment. Everyone wants to be kind of negative, I guess. TDoc, down 44% on this one. This is nuts. This is another nuts one. This is, you know, valued at what it was 4 years ago. It's valued at less than what it bought Livongo for. This is just, once again, I think this has the potential to move very quickly in the right direction as well. Visa, it's been pretty flat recently. Actually, one of the ones that are holding up very well, but I've been considering maybe moving that into the opportunity with Square and PayPal down at the moment. But yeah, I like Visa at the moment. Disney down 10% on that one. A big Disney fan, potentially thinking about buying more with the recent drop that it's been on. And that's everything in the Giro portfolio. And then we move on to Trading 212. So same again, Alibaba in here. We've covered that one before. Beyond Meat, I'm actually thinking of doing a separate video this week on Beyond Meat itself, so I don't want to talk about it too much, but it's a big year for Beyond Meat. It's basically a make or break year on Beyond Meat now, and I think I'm happy with my position. I don't think I want to put any more capital in it, with it being a bit more of a high risk play. And there's a bit of uncertainty around there with Beyond Meat at the moment. So yeah, the time where I'd probably buy a bit more of that one is if I saw the financials move more strongly in the right direction. So yeah, I'll probably talk about that one later, a bit more later in the week. Corsair down 25% on that one. With Corsair, it's a bit of a strange one actually, because I was looking at one thinking I actually have a really good average on that one. The company's been flatlining for a bit of a while. It seems to have found a bit of a bottom here, and I actually think Corsair has really good valuation, and I've not bought it for a while. I think because I was quite happy with my position size, but I'm at the moment debating, do I buy this stock, do I buy a bit more of it and get that average a little bit lower, but I have got a good position size. Yeah, I'm having a good think on Corsair, potentially buying a bit more of it, but I really do like Corsair at these sort of valuations. DraftKings, obviously, my number one holding. In my opinion, fantastic company. Fantastic 2021. Does not deserve to be down at these sort of valuations. This is the next big thing in the US digital age. This is, online sports betting is huge in the next few years. I think DraftKings will be a 100 billion company in the next 10 years. 100%. I have a lot of confidence in it. It's reflected. It's reflected in my portfolio. What I have the confidence in it. So yeah, I would love to keep getting that average lower and lower and lower and buying more shares in it. So much confidence in it. EHang down 73%. This is a very high risk spec play. It's a make or break investment really. We'll see how it does in the next few years. If drones go on to be huge, this company will benefit from them because it's the leader. If they aren't successful, then obviously this company won't do that well. Positive news is they've just got the largest order they've ever had, which is fantastic. Fintech, they're supposed to merge with eToro, but there's not too much news on the progress of it yet. It does seem to be taking a while for that to happen. So once again, a little bit of a higher risk play in that one. Meta, same again, up 5% on that one. This is where I've been trying to build up a very good position in Facebook. Would like to get this into a top 5 positions in this portfolio. But we've combined between the two portfolios. It probably is in my top 5, but in this portfolio in particular, I would love to get it into a top 5. Callaway Golf, which is down 7%. I'm very surprised to see this down. You know, this has had a very good 2021. Probably should buy a bit more of this at some point. Hims down 25%. Probably should buy a bit more of Hims if I can. I think this, once again, I think Gang has a lot of upside on it right now at these valuations. Hims is another one. Hims, in my opinion, in the next 5 years has a 5x to 10x potential if it carries on doing how it's doing. InMode up 62% on this one. I mean, this is crazy to think this is a stock that I was up, 400% on. I'm buying this one heavy at the moment. I mean, this stock brought out fantastic Q1 earnings and then went down 7%. That's just the bear market we're in, so I'm buying that one up. Planet 13, down 59% on that one. I would really like to buy more of this. The problem is it's a bit more of a high risk play, and there's some quality companies on sale right now that I've already gone through in this portfolio. The likes of InMode, Hims, Callaway, Facebook, DraftKings, Corsair, Alibaba, Disney. Unfortunately, I've got to prioritise them. Those are very high quality companies that don't really have that many dips. Planet 13 still has that little bit more risk to it, unfortunately, because of the industry that it's in, and I've got to prioritise them. If it wasn't for that, I'd be buying this one quite a bit at the moment. And then we've got some PayPal. Same again, I would love to break this into a top 5 position if I can. Down 13% on that one. Shopify down 39% on that one. I've been trying to nibble away at that one. Want to get that average lower on that one. That is going to be in the next 5-10 years just a major platform to help e-commerce platforms as it already is. Skills down 81% on that one. I have to see how management go with the new plan they've put ahead here. The kind of stopping marketing, focusing on more profit growth. Unfortunately, management made a bit of a stinker. They should have done this 2 quarters ago and moved slowly in that direction. So because of the fast change, that's absolutely killed the share price at the moment. So management pulling a bit of a stinker on shareholders there a little bit at the moment. So yeah, I still have I think this is still way too low for Skills, and I still think it could do very well in the future. Unfortunately, management have made a bit of a balls up in the last 2 quarters, which has let us down a bit as shareholders at the moment. So I'm just kind of sitting on that one and seeing what happens there. A little bit let down from the management team on that one in the last 2 quarters. Square down 34% on that one. Same again, nibbling away on that one. We've got Tattoo Chef, lost a bit of confidence on that one. I'm just holding that one down 38%. Turtle Beach, a bit flat on this one. I was hoping the company would have been bought out by now, which it doesn't seem to be happening. So I am kind of looking at that one thinking, could I use my capital somewhere else on that one? Maybe in a position that I already own, but I've also been considering another 2 companies, which I could potentially move that into. And then Walt Disney again, which I'm up 24% on that one. So those are the stocks that I currently own. Those are my positions, what I'm up, what I'm down, and everything like that. So a little bit of an update for you guys. And like I said, I'll update you again in a couple of months' time, end of the quarter again on the YouTube channel. But for you guys that are on the Patreon, I'll do my regular monthly update as well with how everything is going. But I think generally, you know, I'm happy where everything is. I think there's a lot of stocks that are in positions here to go on very good runs in the next coming few months and years, which is really exciting. So while I'm trying to accumulate more shares and bring these averages down on these positions, and I think there's a lot of stocks that will do very well. So that's everything, guys. Hope you enjoyed it. If you could, hit the like button. If you're new, subscribe, and I'll see you in the next video.